Hey everyone, Rayming here. So today I have a special guest. His name is Wei-Han. Wei-Han is a property investor and specialized in investing in the US property markets. So today I got him especially to share a bit more into his journey investing in the US markets, US property markets, and how can one as a beginner actually get into the property investing sector. So Wei-Han, do you mind sharing a bit about your background, your journey, so that our audience can understand you a bit better?
Yeah, sure. Thanks, Rayming. Hey, hi everyone. I'm Wei-Han. Han for short. I came from a corporate 9 to 5. I worked for SAF in the past, and I always thought that it's a very interesting world out there. I see people who do the investments and stuff like that. So I got interested in investment very early on the start. So back then when I was in university, I went to join a mastermind group and learn how to do investments. And it was very interesting start because when I first started, it was like, I think, 05, 06, 06, 07, putting a little bit of money. And then after that, as we all know, the global financial crisis came, and it was a great learning experience. So then after that, then I learned along the way and invested my money and understand value investing and stuff like that. Read quite a lot of books, study a lot, learn from investment, learn from all the internet, and also learn from mentors, great mentors. Yeah, then it was, so how did I started my real estate investment journey? So basically, towards the end of maybe 16, 17, 18, around that period, things, I just felt that I just felt that the market was a little bit overvalued for me. So I decided to maybe diversify a little bit. So I started to learn about property investment and stuff like that.
So you mean the stock market is a bit overvalued, and then you diversify into US property market?
Yes. So to me, I'm actually a bit gassy one, quite conservative. So I hold on to my price to earnings, my dividend yield type of numbers. So at that point of time, and mostly I do it in Singapore, but I also have some stocks overseas. So at that point of time, because of multiple years of low interest rates, then the PE of all those companies start to go up a little bit. So I was a little bit uncomfortable, and I just wanted to find other place to, because as you continue to earn your income, then you already in your money into some of the investments already, like stocks. Then but when your income comes in, then like, okay, this money, where do I put? Should I put in stocks? Then like a bit overvalued already. So I thought then okay then I went to explore other places, like other investments assets. So that's when I had a friend who was overseas. He in the group chat said, hey, I'm driving my way to buy a property. So it's like, wow, okay. As he's also in US also. So I'm like, okay, keen. I'm all along, I always wanted to know about US investment property, because I forgot the context. As I was trying to explore in real estate, I do look at Singapore property, but I'm a cash flow person. So I realized that over here a little bit pricey for me. I mean, not that it's not a good market. It has great appreciation, but I'm more of a cash flow person. So when I do the evaluation, it's like, every month must tiap lui one, every month must put money in one. Not really my cup of tea lah. So that's why I was looking overseas and stuff like that. So that's when my friend said he's buying properties in the US. So I went to go and speak to him, talk to him. Then the moment he come back to Singapore, straight away buying coffee, then run the numbers with him. Really, like, actually makes sense. Then I also understand the process and all those things. So that's my first start into properties. Yeah.
So I also know that I think we connected through stocks investing. So I also know that you invest through stocks also. So since you do both, like stocks investing and property investing, how would you compare and contrast these two? It's always good to diversify in different asset classes, but if you were to paint a comparison, how would you balance these two? What are the pros and cons if you were in relative terms of stocks investing and property investing?
Yeah, I think stocks investments is Actually, I do quite like stocks also.
Right.
I have both quite well weighted lah.
Yeah.
What I feel the biggest difference is stocks is quite passive. You buy
Okay.
already, then you don't really have to do much.
Right.
I mean, I'm a fundamental person, so I only check like perhaps maybe every quarterly,
Mm.
and then I'll read the annual report. Yeah, so in between you don't really have to do much. I mean, of course, you have to first read and understand the company before you invest. So that's the most challenging part lah, where you have to go
Right.
and really go and crunch the numbers, understand the business model and stuff like that. Whereas properties, I think it is more operational. It is it's like a business where you run a business because I mean, uh, where I am in Singapore, most of the properties that I bought, I buy it from Singapore.
Right. Okay.
So
Okay.
there's people there that's running the operation stuff for me. So I have to watch over them. Yeah. So it is more. I wouldn't say it is more that there'll be a bit of work like every month. It comes the statement comes in. You got to check. Once in a while, they tell you this one break, that one break. Then they will recommend you some ways to go and solve it. Like say for example, maybe fridge spoil. So fridge spoil, you probably have to ask why spoil, where spoil. If not, they will just tell you, oh, hey, buy a new fridge. Then you say okay, then you buy a new fridge, then that's it lah. But sometimes maybe just fix up one or small things, then can already. So this is the things that you have to sort of learn along the way, and there will be some stuff that spoil along the way one. So it's a bit more operating lah. Yeah, and you have to
Right.
check your statement lor.
Well, sounds like a
Yeah.
bit of work to need to like liaise with all this. Also for the work that you do, right? How are the returns like? I mean, for the past maybe just give a conservative average return, say for the past 5 years since you started.
Yeah. So I think the returns every month is different, but
Right.
every time we buy, we evaluate. We want to have like a positive net rental cash flow net lah. That means expense everything out already,
Right.
including tax and all those things. We aim for 5%, and we are roughly there. In fact, actually, COVID period was quite good for us because rent grew a lot. So it is more than 5% lah. Yeah,
Wow. Okay. 5% per month.
5% per annum.
Per annum. Oh, okay. Okay. Okay.
Yes.
Oh, that's pretty
Yes.
decent also. Right. 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 Okay. So then, like why US market? Because I think you shared, you are more focused in the US. Why US? I mean, you contrast to Singapore lah, but why not outside of Singapore? There's also like Europe, like the world is so big, right? Like Australia, so on and so forth. Why US?
Yeah, so actually, I did explore a lot of places. I didn't quite okay. So let's say for example, you when you want to, this is a rental business, as opposed to like a trading business. You buy and then you wait for the appreciation. So with that in mind, that's the context. So you want to look for people that rents. You want to look for places and nations that rents. So in a way, I think
Mm,
Asians love their properties.
mm,
So when Asians love their properties, they will pay quite a lot. One like you take a look at China, Singapore, Malaysia, yeah, probably Malaysia, Hong Kong. These are all the more a bit pricier, but also it's an appreciation market lah. So
right.
when you look at these places, you actually don't see a lot of cash flow per se one. Your rent is like that, but your mortgage maybe even higher. So every month you're like paying like it's like an installment plan like an endowment annuity lah. So you got to keep paying one. So I
Understand.
wanted something different.
So you're saying for like most markets, right? Like for example, Malaysia, it will be like you need to down tier a bit, like what you call that, you need to offset. So from your pocket
Correct.
to cover the bank, to pay the bank for the mortgage and all that. And then after that, towards the end, when you sell, X number of years later, then the capital appreciation is there. Whereas for the US
Correct.
one, like you mentioned, upfront, net everything, you still got a bit of cash flow, extra cash flow at the start. Right. So
Correct.
that's what
In
you're
fact,
looking for.
you start making
Hmm.
correct. You start market. If you do your due analysis correct, right? You start making money from the first month.
Right.
At the same time, it's only cash flow because if you select the city correctly, you do still see appreciation one. It's just that I always discount the appreciation first and I evaluate based on the cash flow. Yeah. So you get both actually. So when I report to you, when I share with you, it's 5%. I have not considered my appreciation. Actually, appreciation past few years also have been crazy, but I mean, it's something that I don't really care about lah, because I don't plan to sell it so soon, and I plan to hold it lah. Yeah.
So I just thinking from like stocks perspective, right? Like the 5% is a dividend, and not like, for example, Coca-Cola give 5% dividend, but not including the capital appreciation. Yeah.
Correct.
Right. Okay, I get it. So like all this sounds good, right? But like for beginner to like how to get started in the US, like I mean, of course you are a bit ahead in the game, but like for beginner to like US also many cities, and you mentioned you need to choose the right city. And in the city, I guess you probably need to choose the right district or whatnot. So how does one actually, let's say I totally know in property investing, right? Especially outside of Singapore, how do I get started?
Yeah. So different cities. First thing is it's not one US housing market. It's
Right.
very fragmented one. What is perhaps maybe like today, Boise, Idaho is doing very badly in terms of the prices. It's come down quite a lot because it was overinflated during COVID. A lot of people moved there, but perhaps maybe another places like maybe Pennsylvania or Detroit is not that bad, because during COVID the population didn't flood in. So
Right.
now so different markets have different economies, different cycles. So that's why you got to look at it differently, which is what you are asking. So
Right.
usually I will look at it from, because I'm a cash flow person, so I will look at it from a rent to price ratio. So I will generally look for cities that have higher rent to price ratio. So they have this thing called the median income. Median rent and the median house price. So I will take known data, like I do my research and I go and Google and say, okay, come up with a list of places, like maybe Zillow, they will aggregate all the data. You go and download one spreadsheet, then you go and sort them based on rent, and then sort them based on price. Then you do a calculation, and then rent divide by the price, and then you want to try to hit that 1% ratio. So I will try to hit 1% ratio. That means my rent, let's say if that median property price is 100K,
Right.
then the monthly rental is 1K. Then this fulfills my criteria. But I'm not looking at one property. I'm just looking at the aggregated data, the median.
Right. Okay.
So that's one. So that helps me to look at it. So when the market is about this price, then it is easier to find individual properties there that fulfills this criteria, then as opposed to if you find something that has a lower rent to price ratio, right? Then it's harder to find that one property that can make your numbers make sense. But in the US, there's also another thing you need to take note of if you want to start. Basically, you need to look at the laws. US is not one country, one law. There's federal laws, there's state laws.
Right.
So you need to take a look at the state laws also. So you need to find places, you need to find states or cities that is landlord friendly. So there are states whereby you take maybe 3, 4, 5 months to evict a non-paying tenants, where there are some states maybe 1 month. If they don't pay 1 month, they are out already. So in this way, it helps you to sort of like reduce your risk, because if things goes wrong, then you could easily get them out very quickly.
Right. So the variables are more controllable and shorter time frame, like in this case, evicting the tenant or whatnot. Right. Okay, interesting. Then I also I think right now this year we are in 2022 with all the interest rate rising. Those property investors who are on on a floating interest and all that. So like with interest rates, and then they are like affected. So with all the macro stuff going on, and then rising interest rates, how does that affect your property thesis, property investing game plan, and what's your thoughts on all this?
Yeah, actually, it's both good and bad. Bad. I will just say the bad first. Bad in the sense that property price will come down. But it will be bad for my current holdings. Yeah, but actually it is immaterial to me actually, because I don't plan to sell, and it's cash flow positive. I don't need to top up money. It funds by itself. So actually it doesn't really matter if it goes down.
Right.
Yeah, and I do have some property loans, but these loans are 30-year fixed rate. That means, and when we say fixed, it's not like Singapore fixed 3 years, it's 30 fixed for 30 years.
Wow. Okay.
Yeah. So and the rates are quite good compared to today lah. So I'll just not have to I don't have to worry about my rising interest rates lah. It's not something that I will be worried about for those that I'm holding on to. But if property price comes down, then let's say if property price comes down, then it is good for me if I want to continue to buy more. It's just that now my cost will be higher because mortgage rates are higher. Yeah. So it'll be more expensive per se. But the good thing is, in the future, if interest rates do come down, then you can refinance. So in a way, I buy low, interest rate is here, but few years later, if interest rate drop, then I lock in my purchase price already, but I can refinance at a lower rate. Then my buffer for my cash flow will be even higher. So in a way,
nice.
I'm actually hoping for, interest rate to go, to have the opportunity to buy more lah, if it really happens. But if it doesn't, then okay lah, so be it. Then I will just continue to hold the properties and buy when I find a good deal.
So like, for example, I just contrasting it to stocks investing. So, like invest in stocks, there must be a when to sell thesis. For example, if the fundamental change, the thesis change, you need to get out. So for property, after you buy, is there any like, red flag indicate in situations where possibly you might want to sell when it's an unexpected scenario? Yeah.
Yes, there is. Basically, long story short, basically, if the city start to sort of crumble in that sense, if it is not run well, population outflow, there are. So I give you one example. Back in, I think, 50s, I cannot remember already. 2007. When let's say the automobile industry, let's say you're in Detroit, for example, then the automobile industry is taking a very big hit, or maybe even outsourcing, a lot of manufacturing outsource. So when all these outsource are, then the whole secular trend of the economy is already disrupted already. So then all the factories and all the HQ all start to close down, pull out, then people start to move out. This is very bad. So then you have to start to think about, should I sell? Because property price definitely will go down. Not only that, your rent may go down also. So this is where you start to think about it. But otherwise, I don't have much other concerns, because I've seen properties that are like early 90s, 100+ year old one, and they are selling quite well. Because they're in good locations. So people go in, they will tear down everything inside, they will renovate it until brand new stuff, and it still sells very well, apparently.
Right.
So there is really no, it's really about the macro fundamentals of the city that will probably cause me to worry about and to think about selling. Otherwise, it's well funded, it funds by itself, it stays there. I don't have to worry too much about it. Of course, once in a while, this and that have to, the interior will degrade. Well, that's natural. Then you just have to budget some funds from your rental income to go and renovate it. So this part and parcel of the business. Yeah. So there's actually one thing interesting is that in US, right, a lot of people they try to hold, and then after that, if you, let's say touch wood, you pass away, pass away, right? There will be estate tax. But if you structure it properly, right, you could actually inherit it to your next generation without much tax, and then they have the step up cost already. Yeah, correct. So then automatically they get the same rental income as what you're getting already.
Nice. So I think what you share is very insightful and helpful for the layman. So like, I guess, just curious, like with everything that's happening, macros, insurance going on, I guess that's more of opportunity for you, like you mentioned earlier. So what is like your, what are the things you're looking at moving forward from here? What's your game plan? Are you looking to buy more and whatnot?
Yeah, actually, I am I am definitely okay. I do see that there's a trend now that it does seems like it is okay. In the past, it's like they once you see a good deal, right, there'll be like 10-20 people that's like fighting over it. Today you can really see the slowing down already. Sometimes it sits and then you will see price cuts here and there. So but it's still high. I think it is still high because interesting thing about real estate is very slow. It's not stock market. Facebook yesterday just announced, then dropped 20% straight away already. In real estate, it takes a while because there's the price discovery realization lags one.
Right.
So like today, some bad news. People still it haven't been factored into the price. So and even if it is factored into the price as comparables, right? It will take maybe 1-2 months before it is like official because it takes time to process.
CPI inflation data like that, lagging.
Yeah, there's a lag one. So then right now it is the other way around. So it is coming down, but it's just started only. So it takes a while lah. Yeah.
Okay.
Another thing is also in a way it is sort of resilient because it is a need. It is not like if you have a house, today you stay in a house and your house lost 20% value, would you sell?
No, I do stay there.
So let's say a half. Today we know that about 60% are homeowners, 50 to 60% are homeowners. Property, if economy don't do well, property price drop, they probably won't sell one lah. So they will hold on to it.
Means what? Means that it doesn't affect the price drop that because no one is selling, is it?
Lesser people will sell lah. Like for example, there are
lesser transactions.
Yeah, I think 60% are homeowners. So if price drops, they will just hold on to it. Only the other remaining 40% they are investors that might be more concerned. Yeah.
Interesting. So if like one want to explore more into this US property investing, how to get started?
I have a YouTube channel, so can explore, can follow my YouTube. I do share quite a lot on this, but yeah, the interesting thing about starting US property, actually that was one of my challenges. The data is not so easily accessible per se. I mean, but there are websites. You can go to various websites to go and see. They are like bigger pockets website and stuff like that lah. So you can go and learn roof stock and stuff like that. So you can go and explore as much as possible and learn. But it's very fragmented. There are also other YouTubers like Meet Kevin and Brandon Turner and all these big names are. But yeah, and they have courses also, so you can pay and learn from them. So these are some of the places where you can learn. Otherwise, it's on the internet, but it's just very fragmented.
Definitely, right? Do follow Han on his YouTube channel, Bite Size Investments. I think I watched a few of your videos before. I think I explained it very clear and concise, with very clear illustrations. So I think the quality of the content of the videos is really good. Yeah. So audience, if you are watching it and if you are interested into more property investing stuff, right, do follow Han on his YouTube channel. Right. So before we, I think it will be very good discussion and hearing from you about investing in the US property side. Before we end off, perhaps just one question that I would like to ask you, right? A bit maybe non-investing and non-property one, and that is, like what is happiness to you in this day and age, right? Happiness have different meaning for different people. I know it's a bit cliche, but just curious, what is happiness to you?
Yeah, it's a good question. Happiness to me is being able to do things whatever I want whenever I want so to have my own freedom lah. So I think financial freedom is happiness lah. So it's a very big thing. Yeah. I do aspire to like when I have financial freedom, like let's say for example, happiness to me is like I get to do the things I want. For example, it's like I'm very passionate about climate change. I do my own gardening at home. I farm, I grow my own vegetables, I harvest. So maybe set up social enterprise that helps the world lah, like fight climate change or animal sanctuary and stuff like that. Yeah, all the nature stuff or travel lah. Yeah, for me, I also travel.
I guess I can resonate what you said like the people always say money can't buy happiness. But money can buy you a lot of things. Can buy you time, buy you the freedom to do what you want. That can bring you happiness. Like in your case, could be traveling. People like to travel. And then you talk about you have this belief about climate change, and then you can do simple things like gardening at home, and that's because you have the financial latitude to be able to do that. Yeah, I think that's really important. Yeah. All right. Thanks so much for sharing. So if any of our audience want to, find out more, connect with you or find out a bit more about what you do, right? How can they do that?
Can swing by my YouTube channel. It's Bite-Sized Investments. I post weekly contents, or you can also come by at my Twitter. The Twitter handle is Bite-Sized Invest because of the word limit. Yeah.
All right, awesome. I will put your socials down below, all right? For audience, right, just look at the show notes if you want to connect with Han. All right, also if you do enjoy this video, right, do give a like, right, and do follow also for more podcasts. All right, I hope you guys enjoy this sharing. Any last words for our audience today?
No, I'm good. Please like the like button below on Rui Ming's YouTube channel.
Yeah, and also any questions for Han, you can text him, I guess, on his socials, or you can drop a comment below, right, and I'll forward the question to Wei Han. All right, see you guys until the next one. Bye bye.
Okay, bye.